Welcome back, my financial freedom fighters. It's your favorite family member, Money Mill Jr. And today, this video is dedicated to our very own family member, Mark McGee. In the comments, Mark asked me, he said, "Hey, Money Mill, what do you think about credit builder accounts?" And Mark, so my personal take on credit builder accounts is that I don't like them. You would say, well, why don't you like them? I don't like them because what these accounts do is I think they prey upon people who are in a crunch or who seriously needs some type of credit revamping to get something done that they're trying to get done. But in the end, it really does not help them. And I'm going to show you why today. So if you all seen any of the previous videos, you know that I always talk about the 6 categories of your credit. Excuse me. It's actually a 7th one, but I'll tell y'all that on a one-on-one. But look, so when you talk about these credit builder accounts, what they do is, let's give you an example. So you'll go to whoever's providing the service and they'll say, okay, you're going to give us X amount of money over X amount of period of time. The time is usually anywhere from like 12 months. The most I've seen was 36 months, I believe. But so over this time frame, you're going to be paying them monthly installments, monthly payments. So this credit builder account is an installment account. It's not a revolving account. So what you do is they say, okay, hey, Mark, over the next 3 years, you're going to pay us $100 per month every month. And what we're going to do is we're going to report this to the credit bureaus, informing them that you are a good paying credit person, that you're in good standing. But what happens when you do this is, so the credit company who you're doing this with, they're going to pull your credit so they can inform you on what credit rate that you will be paying them back at. Because if you're high risk or anything of that nature, they want to make sure that they get the most interest out of you. So therefore, you're going to get a credit pull. Then next, once you get a credit pull, just like I informed everyone on my other video, is that it's going to affect your credit age. Because every account, what they call a trade line, every trade line that you have open, it negatively affect your credit age if it's not a certain age. So when you go to this credit person, entity, and you say, hey, I like this credit builder account, they're going to say, okay, we're going to pull your credit. Boom. Your credit's some trash. You got a 500 something. We still going to give you the account, but we need like a 20, 30, 40, 50% interest back on this money. And we need these payments each month. Make these payments on time each month, which will hit your on time payments, but make these payments on time each month. And we're going to report to the credit bureaus every month that you are a good standing credit consumer. So, but what's going to happen is, let's say if you have, right now you have 8 years of good credit history, but you just need, I don't know what would be a reason to get in this credit builder account, but you go get it and you add that credit builder account right under your, whatever you had that 8-year credit history on. So now instead of 8 years, you have 4 years of credit history. So you get what I'm saying? So in 2 ways, it just negatively, instantaneously affected your credit score. You got a credit inquiry on it and you lowered your credit history. Now they're going to do what they say they're going to do. Every month they're going to report that you're paying your credit like clockwork every month. So that's good. It's going to be showing it's good. But as soon as that 12 months or that 36 months over, what's going to happen is that's going to drop off your credit. Yeah, that's going to go back to 8. You still going to have that inquiry and all that good credit history you just built up. It's not going to be it's not going to mean anything towards your credit score. So that's why I personally do not recommend them. I haven't done them, or I don't like them. If you want to build your credit, what you go do? Go get a secure credit card and build your credit that way with revolving credit. I preach this time in and time out. When you want to build your credit with revolving credit. Installment credit is not as impactful as revolving credit. And once you're done paying it back, it is off of your credit. It will stay in your credit on the amount of credit accounts you have had, but it's not going to progressively affect your credit the way that you want it. So I hope that I answered that up to your liking. If I didn't, whatever, drop me some comments below. You know that I answer everything. Have a wonderful day. All right, family.